Mr. Clancy, you recognized.
Thank you very much, Senator Rayford, Senator Ingram, and Senator Elliott, other distinguished senators whose name I can't know, Senator Keith. Thank you all very much for this opportunity. I'm Dean Clancy, Vice President of Public Policy at FreedomWorks. We are a national grassroots advocacy organization of about 2 million members nationwide committed to individual liberty and constitutionally limited government. We have about 18,000 members here in Arkansas, and our message to you today is to go slow, and I'm going to explain why in a few points. A little bit of background about me so you know who's addressing you. I have been in health policy in Washington for 20 years, worked in the White House Office of Management and Budget. One of my jobs there was to review and approve or disapprove state Medicaid waiver requests. So I've seen this from the inside in Washington. And by the way, I understand that with the offer that Arkansas has received from Kathleen Sebelius, by the way, congratulations on that, that's very impressive, but just be aware that there's also a sales manager in the back room called OMB in the White House. And so the deal that you've been offered may not be a final deal. That's one reason, by the way, to go slow. The other problem with this deal that you should focus on is the fact that it's 3 years. And if, as we believe, there's going to be a potential train wreck, then you're going to have to face that in 3 years. Many of you, I understand, are newly elected, and congratulations. But you're going to want to think about what's going to happen there if you put 250,000 people into a program and then find that because the deal doesn't last, you might have to disenroll them. You'll notice here that I'm speaking about practicalities, although our group has been critical of the President's health care law. We accept that it's the law. We're trying to help you here think through what is good for Arkansas and its citizens. Now, 26 states, as the previous presenter pointed out, have said no to an exchange in their state. That's an important factor. Why is that? Well, I would suggest that it's because they've done their own analysis and decided that it's just not a good deal for the state or for its citizens. They will have to spend money to run the exchanges, and it's potentially tens of millions of dollars a year. I mean, they have to bring together data from employers and insurers, the IRS, HHS, immigration authorities, and so on and so forth, such that it's a very massive operation. And yet the federal government will retain full control of the exchanges, whether they are state established or federally established. And so I realize that Arkansas has gone down the road of saying we'd like to do a hybrid exchange. There's question about how that fits, whether it's federal or state. But again, I would suggest that you should think about going slow there before taking on costs that may be greater than predicted at this point. Why are exchanges even being talked about? Are exchanges actually a good idea? Why are we doing this? In theory, the market should be able to provide people with affordable health insurance options, and yet we were told that we need exchanges to make this possible. If you think about it, the market already does provide exchanges. Travelocity was mentioned by the last speaker. That's an exchange for travel services. eHealth, or eHealthInsurance.com, is an exchange for price comparison shopping for health insurance. So the market has already produced a kind of exchange. Why then do we need a government-run exchange under this health care law? Well, in order to try to control, in order to try to get everybody covered. Of course, the law still will leave more than 20 million Americans uncovered, so it fails to achieve that purpose. But the exchange also is designed to give the government the ability to regiment insurance. So instead of having many options, as on eHealth.com, you may, in some states, have very few options chosen for you by the government. That might not be so good for the citizens of the state. In a sense, the exchange would be a costly bureaucracy. To go back to the question of 3 years and uncertainty, the federal government has its own budget problems right now. As everyone knows, there's a sequester scheduled to kick in 2 days. The continuing resolution funding 1/3 of the federal government expires at the end of March 27th. And of course the debt ceiling will snap back in the middle of May. So there are these constant cliffs. Washington is stumbling from fiscal cliff to fiscal cliff. How can Arkansas be confident that a deal that sounds very generous today will in fact still be there? In fact, federal legislation generally gets reopened. Laws get reopened. That's what happens. One Congress can't bind another. So factor that in as you think this through. I want to end by talking about why there's a better way than government-run exchanges. And of course, again, we respect whatever decision you make, but we'd like to remind you that we actually see markets can work in healthcare just like everywhere else. Think about cosmetic surgery. Think about laser eye surgery. These are different from other areas in healthcare. Why? Because insurance doesn't cover them. Government programs don't cover them. People pay for them out of pocket. The result is prices are always falling in those 2 areas of healthcare alone.
Yeah.
And quality is always improving. Markets work. Freedom works even in healthcare. And we should try to build on that. At Freedom Works, we talk about patient-centered care rather than government-run care. So we would like to see the country move in that direction. We would like to see the mandate to purchase health insurance repealed so that people are free to choose the health insurance that they want. We'd like to see states say no to exchanges, or in the case of a state like Arkansas where you've decided you want to do something perhaps in that area, to go slow. Think about it. Make sure your federal partner is going to be there for you down the road, and this isn't going to be unduly expensive. I'll finally say, and then I will be quiet now, this law is already driving up the cost of health insurance, already, in anticipation of mandates that have not kicked in yet. And at least 7 million people are going to lose their employer-provided insurance because of the way the law is structured. Employers are going to dump them into these exchanges. And if you have an exchange, that's where they will end up going. There's something wrong, I think, when the government sets up a program that causes 7 million people, and that's a minimum number, it could be higher, to lose their employer-provided insurance. This is all something, these are all things we'd like you to think about. We're happy to help you. We understand you're wrestling with a very difficult problem. And thank you very much for the chance to testify.
Mr. Clancy, thank you for coming. Members, do you have any questions for Mr. Clancy? Yes, Senator Elliott, you're recognized.
Thank you, Mr. Chair, and thank you, Mr. Clancy, and welcome. When you say go slowly, could you be more specific? What does that mean to go slowly with the deadlines, with the dates that we have out there?
Sure. October 1st is when all the exchanges are supposed to be ready to go. January 1st they're supposed to start. It's clear now that because more than half the union has said no to a state-based exchange, that those deadlines are not going to be met. My own view is that the reason that such a generous offer has been made by HHS is because they're in full panic mode there. You're getting bargain basement offers now because they're desperate. They want to get this thing to work, and they don't want to have to reopen the law anytime soon. So we're not going to meet those deadlines, in my opinion. It's just not going to happen. But going slow gives you the advantage. You know, if they're making you a good offer today, maybe they make you an even better offer tomorrow, plus the uncertainties that I was mentioning about. So, for example, and now I'm just brainstorming, and I hope I'm not trenching upon your prerogatives, but perhaps you do a special session of the legislature to deal with this at a future time, so you don't have to rush to make your decision now. That would be wonderful.
And how do you distinguish between your first statement was it's just not going to happen, and then you say that in your opinion it's not going to happen? That's two different things, right?
Well, sometimes I state my opinion without the humility necessary to get past my wife, but...
Oh, I Senator Elliott. So
He's now been initiated.
Okay, all right. And I did have another question, but you know, the community thing threw me off here, so let me see if I can read my own note, Mr. Chair. When I just wanted a clarification about this from your perspective, so it's okay if it's your opinion on this one. When you talked about the federal exchange, the feds are in full control of the state exchange and the federal exchange, could you just give me a little bit of is there an advantage then in one or the other if the feds are in complete control?
Yeah, if the feds are in complete control either way, then there is a question of, well, why would the state do it if they have to pay for it? That's a serious problem, and I think that's probably been the main factor why so many states have opted to just let the feds do it. I can't think of a reason why it's better for the states to do it. As you know, I'm critical of the concept, basically, but no, I don't know.
All right, thank you very much. I appreciate it.